Welcome to the Explainer. Today, we're diving into MetLife's absolutely blockbuster fourth quarter earnings for 2025. And we're going to break down their bold new strategy for the future, something they're calling New Frontier. Okay, let's just start with the headline number that's got everybody talking. A stunning, record-breaking $2.58 in adjusted earnings per share for the fourth quarter. I mean, to put that into perspective, MetLife themselves said this is their highest single EPS quarter ever. So how'd they do it? Well, the company's CEO, Michel Khalaf, is pointing straight at their new strategy, New Frontier. So in this explainer, that's what we're going to do. We're going to unpack exactly what that means and how it's cranking out these incredible results. All right, first things first, let's really put that record quarter into context. We'll get into the numbers behind that big headline and break down the key metric that everyone's focused on. Now, just a quick refresher for anyone who needs it. Earnings per share, or EPS, is a really fundamental way to measure a company's profitability. It basically tells you how much money the company is making for every single share of its stock out there. And this chart, wow, this really tells the story. You see, it's not just that 24% jump from the same time last year. At 258, they completely blew past what Wall Street analysts were expecting, which was more like 234. So this wasn't just a good quarter, it was a total home run. Okay, so this is the crucial part, right? Understanding the strategy that's actually driving these numbers. It's called New Frontier, and it is all about focused action and just getting it done. So at its core, the strategy really boils down to these key things. They're laser-focused on smart, responsible growth, putting their money where it's going to work hardest, and making some really big plays in fast-growing areas like asset management and the retirement market. And listen, this is not just talk. MetLife took some very real, concrete steps in 2025 to make this a reality. They pulled off a major acquisition, they executed some monster deals in the pension world, and they sent a whole lot of cash right back to their shareholders. So let's look at the results of these actions. First off, by buying PineBridge investments, they created this absolute powerhouse of a new division called MetLife Investment Management, or MIM, and it now manages a staggering $742 billion in assets. Second, they went all in on the retirement market. They took on over $14 billion in what's known as pension risk transfers. Now, that's basically where MetLife steps in and takes over the job of paying out pensions for other big companies. It's a huge, growing market, and MetLife, that was a new company record for them. And finally, they showed some serious financial discipline by putting money right back into their investors' pockets. In 2025 alone, we're talking nearly $4.5 billion returned to shareholders through a mix of stock buybacks and dividends. You know, this strategy isn't just working in one little corner of the business. It's lighting a fire under several key parts of the company, especially that brand new investment arm and their super strong international markets. The launch of MIM as its own separate business is a really big deal. It signals MetLife basically taking its internal investment smarts and turning it into an external, client-focused machine that's built for aggressive growth. And this chart just brilliantly shows the immediate payoff of that PineBridge acquisition. Their assets under management, or AUM, rocketed from around $600 billion to $742 billion in just 1 year. That's a massive leap. And hey, it is not just a U.S. story. MetLife's international businesses are absolutely on fire. If you look at their sales growth for 2025, Asia was up 18%, Latin America grew by 12%, and the EMEA region, that's Europe, the Middle East, and Africa, posted an incredible 24% increase. So after a truly incredible 2025, what's next? Let's peek around the corner and break down MetLife's official forecast and what they're telling us to expect for 2026. Now, while the company is sounding really optimistic, let's be real, every strategy has its challenges. So it's important we also look at the potential headwinds that MetLife itself has pointed out for the year ahead. So on the one hand, they're guiding for more strong performance. They're targeting that double-digit EPS growth and a really high return on equity, which is basically just a measure of how efficiently they use shareholder money to make more money. But it's not all smooth sailing. They're also being very upfront about the challenges. These headwinds include things like higher day-to-day costs from integrating that new PineBridge acquisition, a projected loss in a legacy unit they're winding down, and some specific market pressures, like weaker results in disability insurance and seeing more customers in Japan cash out their policies early. Okay, let's wrap this all up. Let's look at the big picture here. What are the key things to take away from this report, and why does this actually matter for anyone watching the company? So here's the bottom line. 1 year into their 5-year New Frontier plan, MetLife is already hitting, and in some cases, beating the ambitious goals they set. I mean, look at this. They promised double-digit EPS growth, and they delivered around 10%. They targeted a 15 to 17% return on equity, and they hit 16%, right in that sweet spot. They're on track with their free cash flow goals. That's the real cash a company has left after paying all the bills. And they are way ahead of schedule on their cost-cutting goals. It's a really strong report card for year one. So, MetLife has clearly had a powerful start to this new chapter. The strategy is working, the results really do speak for themselves. The big question now is, can they keep this incredible momentum going as the market and the economy keep changing? And that is what everyone will be watching.